back. You're watching The Money Show with me, Kavita Thapliyal. And on The Money Show, we make sure that we don't just talk about investing in mutual funds, but we also help you meet the brains behind these funds. And in this week's Meet Your Fund Manager segment, we have on board Meeta Shetty, Fund Manager, Tata Mutual Fund. She is the Fund Manager of Tata India Pharma and Healthcare Fund. And let's welcome on board and understand what the fund planning is. Meeta, good evening and welcome to the show. Although you handle more than this fund, but then today let's just talk about this pharma and healthcare fund from Tata Mutual Fund. So before I get into the details of the fund management part, I just want to understand your view on this sector and its trajectory in maybe 2 to 3 quarters from now.
Sure, Kavita. Thank you for having me. If I have to give an outlook on pharma and the fund that I'm taking care of, I'll have to actually split it into two buckets. One would be the pharma and the other would be the healthcare bucket. Now, healthcare bucket categorically has been doing extremely well, especially in the post-COVID quarters and the years after that. And some of it is also driven by the pent-up demand because, COVID had some delays and postponement of some surgeries, etc. But even if I have to keep that aside, the sector seems to be growing pretty well and has been showing a good trajectory both in growth as well as on margins. And that's also reflected in the valuations that we are seeing for the healthcare sector. As far as the outlook for healthcare is concerned, the hospital segment continues to remain quite buoyant, and I think that this segment, as far as India is concerned, our penetration levels, our insurance level penetration on the healthcare side, everything is pointing out to a steady growth, not only from 2-3 quarter perspective, from also from a longer term perspective. Whereas, the smaller bucket within the healthcare would be diagnostic, which is has been going through a bit of a challenge. It had seen a high base in COVID, and we've seen that the post-COVID years have been quite, taxing for the companies as far as growth is concerned, and even the profitability. There has also been higher competition from the new age type of companies which have come into this space, which is weighing on the pricing that this industry was enjoying in the previous years. That's a small segment, but that's going through some a bit of a challenge. But overall, healthcare, I would still put it as a pretty strong outlook going into the future. Whereas the pharma bucket, if I have to talk, I think again that would further split into domestic and some export-facing, revenue buckets. Domestic has been a very steady market, and it contributes to around 1/3 of the revenues for most top pharma companies, at least I would say. And that's been a very steady growing segment. It's a high cash flow, high margin kind of segment. Whereas the export segment has been seeing a lot of volatility in the past, particularly driven by US, because US takes a larger chunk of that export. And, the pricing pressure there has been extremely severe in the past few quarters. And I would say actually since 2015. But particularly last 2 years have been extremely challenging in that sense. So keeping that in mind, I think when I'm looking at next few quarters to say 2-3 years ahead, it's giving some indication that the pricing pressure, which was very high in the US, is starting to look little better now.
Okay.
I would not say it's a price increase scenario, but the deflation is getting into a better shape. So the outlook is improving, I would say.
All right, let's talk about the fund now. Overall, it's a portfolio of 27-28 funds. What is your market cap exposure across categories?
So if I have to give you a bucket of large, mid, small, the large would be over 50%, so slight skew on the large cap. The rest would be mid and small. But however, how I look at it and how I segregated my mind when I'm trying to build a portfolio or change my portfolio, it's more into healthcare and pharma. And if I have to give you that split, on the healthcare side, we used to be at almost 26-27% about 6 months back, where today actually we stand at almost 14 or 15 odd percentage. So we have moved more towards pharma names. versus the healthcare names. And clearly, the reason is that pharma, as I said, that is starting to look better, especially the export bucket on the US side. Also on the valuations, if I look at the valuations of pharma sector, they are trading at low double digit to mid low teens kind of EV/EBITDA multiples. Even the cash flow yields and the balance sheet, everything is actually looking pretty stable and comforting at this point in time. So I more see it as pharma healthcare bucket, and that's the split as of now.
The general notion for this sector is it's a defensive sector, and people can have people can have it in the portfolio, in terms of stability if that's their target. But when you are investing through a fund and it's a sector fund and has a portfolio of 27, 28 stocks, what is the level of risk that we are talking about for an equity mutual fund investor?
So, Kavita, the sector funds will always come with a higher risk radar because they are very specific to that sector, and sectors do go through their own challenges at times. So that risk is always going to be slightly on the higher side as far as when we are comparing it to the a diversified fund or a category like a PAF. So that's always going to be the case. So the allocations have to be very calculated as far as sector fund is concerned. But when you're betting into these sectors, particularly at a time when the valuations are low and the growth outlook is improving or has been good, that usually gives you also an opportunity to create additional alpha over the broader market returns.
What is the return trajectory that we saw in the past?
So difficult to talk on what returns we can generate, but yeah, I mean, we would also suggest that don't look at the past returns. Look at it more as as an option to take part into the healthcare and the pharma story of the India companies, and the way we have always showcased ourselves as a pharmaceutical industry. Today, we manufacture almost close to $50 billion worth of drugs in India, and half of that actually is exported. Whereas the healthcare, as I said, that we are still sitting at a very low penetration. So definitely the headroom for growth is pretty strong going into next many years. And I think that look at it from that angle rather than looking at or me giving a number that's going to be a little difficult.
Will we be seeing this fund going heavy in mid cap category?
So as I said that we already have almost close to 40+% of mid and small segment. And for me to start positioning accordingly in the stock or any category is more driven by where are the valuations and what is the growth outlook. So if it's falling into a philosophy of say a GARP, which we usually try to follow, then I think that it doesn't matter if it's a large or a mid or a small. If it gives me the option to generate some incremental alpha for the investors, it would be taken in the fund and at the appropriate time and at an appropriate position in terms of the percentage of holding.
All right. Thank you so much, Meeta, for being on the show and helping our viewers understand the pharma and healthcare fund and also plan their strategy accordingly. Thank you so much.
Thank you, Kavita.
On that note, we'll take a quick break, and post that, let's get your portfolio related questions answered by Feroz Aziz.